Our next guest doesn't see a lot of value in maybe poring over earnings. I mean, we like to see them, I know, Jim Paulsen, but they may not be quite as relevant in terms of what to do with your investments in the markets right now. Chief investment strategist at Leuthold Group. Does that sum it up, Jim? It's transient, and hopefully we get out of it quickly and go back to some semblance of normal.
I think that's how the market's going to look at this by and large, Joe. It's really hard to look at it. We know they're going to be awful numbers across the board, and some of them just really bad, like the airlines and energy and the like. It's hard to take away a lot from that when you know it. But I think there'll be some interesting things. I think it'll be interesting to see how many companies. They're not going to have what forecasts are they going to have any more than we know. But I think it'll be interesting to see if companies present a confidence that, hey, we're taking a hit, no doubt about that, but we're going to get through this. Or if there's more companies that say, look, we're going to be kind of more permanently impaired here, even when we come out. I think some sense of that will have an impact. I think to the extent companies suggest inability to make payments or something, or that they might have to have more layoffs, those kind of comments certainly would resonate a little bit with markets. One area I'm kind of interested in is what I would say the new era companies that, certainly technology, part of communications, some of consumer discretionary, the high growth sort of persistent growers. They've done so well in the bull part of this market. And they've also done extraordinarily well in the bear part of this market. And you wonder, even though the rest of the economy is falling apart, is New Era continuing to do fairly decently? And if they are, it's sort of interesting. What value do you place on these companies when they can do so well in an up market and also so well in a down market? It's the high growth New Era parts that actually did better than all of the defensive type of investments in this bear market. And they trounced them in the up market. So that'll be sort of interesting to see Jim, what those companies say.
That's interesting. I'll tell you what I find interesting in some of your comments, because it answers a lot of concerns that we were just talking about that I have with Barry Knapp was just on, and about the restart of the economy. And you point out a lot of the rally we've seen is better news on the virus and more talk about restarting the economy. And you point out, at least you believe, that the market can do okay with only a partial and a very slow restart, and that the market will take that, a partial restart, as more of a V than as a U. And therefore, all these concerns that we're hearing about having to wear masks and being tested and not feeling comfortable at a crowded restaurant, all those things, you still think the market will look beyond that, and we won't have just a grind lower based on a very bad restart.
Yeah, I think so, Joe. I mean, if we're going to go down something like 20 to 40% annualized pace in the quarter we're in terms of GDP, then any bounce at all is going to feel like a V off that. I mean, when you have 20% unemployment rate and 25% decline in GDP, if you hit any bounce at all in the third quarter, it's going to feel like a V compared to that. So I think that's the V debate, U debate is not really that pertinent, because I think we're going to have some sense of a V in the last half of this year. 2021 might be a little more slower growth, but we've had slower growth throughout this entire recovery. The last point I'd make on it, look, every recession you have, it doesn't just come right back on. Every recession you have, it's a process of restarting the economy again once you go through recession. In some ways, this might not be that different. We're going to have a V jump to start it. We're going to have a big chunk of the economy which comes back on right away, and then in other parts are going to take longer to come back on. But hey, that's not at all uncommon in past recessions. Look, the stock market in most recessions typically takes off long before earnings turn up. So that's not even going to be uncommon. We could have earnings that are still falling as we have right now, and yet stock price is already recovering. That's happened a lot in past recessions as well. So I'm not as exercised about whether we go back to 100% or not in terms of the economy operating. We won't, but I don't think we need 100% to have the market continue to grind higher.